Hello, my friends. Welcome back, right? It's really good to be back because for the last couple of weeks, right, I wasn't really away, but just behind the scenes, we were busy with our premium training as well as the enrollment of the trend following mentorship program. So now that all this is over, right, we can resume our weekly market analysis. And boy, right, I really miss doing these videos on a week-to-week basis. I miss talking to this camera in front of here, and my mom thinks I'm retarded, right, facing this camera and talking to it every week. But it's all good and well right now, right? So really good to be back, right? So for those of you who are watching this video for the first time, right? My name is Rayner. Hello, right? I'm a independent trader and I'm a trend follower. What this means is that basically I like to trade with the trends, right? I find that trading, for me personally, trading with the trend is where I feel very comfortable doing. So what I share each week is my own thought process of the markets, right? The trending markets, how I'm looking to trade them, right? My entry, exit, my risk management and stuff like that. So basically sharing with you what I'm looking at on a week-to-week basis, and hopefully, sharing some, practical tidbits and nuggets of knowledge that, may help with your trading along the way. So this week, right, since we are back, right, I just want to share with you a few potential trend trading setups that may interest you. So one thing that I just want to voice out is that, this weekly market analysis is not a signal service. Come on, man. I mean, I'm better than that. I don't want to provide signal service because this is something that isn't going to help your trading, right? Because signal service just gives you the entry and exit, and and if you trade these signals, hopefully in the long run you make money. I want to go deeper than that. I want to share with you my thought process into why I enter a trade. I want to share with you my thought process on how I manage the trade, on why I exit the trade, on how much I'm risking on each trade. Right? This I think is important to your development as a trader, right? Entries and exit isn't going to improve your trading at all, let's be honest, right? But sharing my thought process with you on why I'm trading this, how I'm trading it, I believe, right, it will improve your trading. And that is my so-called my goal down here, right? To hopefully improve your trading and to get you to independently become a consistently profitable trader in your own way. I don't expect you to trade the way I do. I don't expect you to, have the exact thought process or the exact entry and exits as me, but rather I hope you understand the principles behind, consistently profitable trading and adopting these own principles to your own trading plan. Okay, that is my hope and my goal for you. Okay, so without further ado, right, let's begin today's market analysis. I'll see you there. Okay, so the first market that I'll be talking about today is the pound dollar, right? So the British pound against the dollar. And you see this daily chart over here, we have this spike down, right? This is due to the Brexit event. So the problem with, trading the markets, right? Trading with the trend is that a lot of times traders, they have no issues, right? Identifying trends. I'm sure you can see this chart over here. You can agree with me that the trend is towards the downside. But what the problem with most traders they have is that they do not know when is the appropriate time to enter a trade. For example, right? You see a large spike down over here, you go short the market at its lows, you go short over here, then a spike comes up, you get stopped out. Then you see the market's going back lower, you start to short, you go short, and markets comes up higher, you get stopped out. So basically, right, I believe most traders, they have no issues identifying the trend. What they have a problem is to identify an area, right? The level that they want to trade from, because they, most of the time we don't have patience. We just want to chase the markets, right? Hope for quick profits. And what happens more often than not is that the market reverses and stops us out for a loss. So it's very important, right? As a trader, doesn't matter whether you're a trend trader, swing trader, or whatever type of trader, is that you want to identify areas on the chart that you want to trade from. So what do I mean by this, right? For example, this is the pound dollar, the daily chart, right? Where is an area on this chart that you want to trade from, or an area where you want to do business, right? This you can see over here is an area of resistance, right? Price came in lower, tested once, traded lower, tested twice, traded lower, and then it seems to be coming in here towards this area of resistance once again. So why is this area that you want to be interested in? Well, because you know that resistance is an area where there will be potential sellers coming in to push price lower. Am I right? And from a risk to reward standpoint, or rather from a risk management standpoint, can you define your risk when you're trading at this area of resistance? Yes, you can, right? Because you can just put your stop loss above this area of resistance. If price were to break out of this resistance and hit your stop loss, chances are you know that you're wrong on this trade, and chances are this area of resistance is not holding up anymore. So let's say, right, let me get some let me say just get rid of this line here first. All right, let's put one black line over here, or rather, or why not just get rid of this line? Let's change it. Right, let's say for example we are going to enter the market, right? Let's change this to green color. Say we enter somewhere this area of resistance, and this is our stop loss, right? Just above this area of resistance. Give it some breathing room, right? You don't want to be too tight just above the highs because it may get, stopped up prematurely, something like this, right? So you want to give it a little bit more breathing room. So let's say, for example, this is our stop loss. The green one over here is our entry. So from here, from a risk to reward standpoint, you can see that this is the amount that you're risking on this trade. And what is your potential reward? Right, let's talk this from a swing trading perspective, right? You're looking to capture a swing in the market. So needless to say, right, this lows over here is a potential target because that there will be potential buyers coming in near this lows over here, this area of support. And if they buy, chances are the market may reverse from it. So this is your potential reward, right? From your entry to the lows over here, this is your reward. So you can see, right, your risk to reward. I think from the looks of it, right, I'm guessing that there's at least a minimum of a 1 to 2 risk to reward, right? Meaning you risk $1 with the potential opportunity to make $2 on this trade if the market goes towards the lows and hit your target at this low over here. And this can only be achieved if you only enter somewhere near this green line over here. If you're impatient, like most traders, they start chasing the market. Let's say, for example, right, the market is heading lower, this big bearish candle over here. You notice it and you start chasing this market. So you enter a very unfavorable price. Let's say you enter somewhere here. You enter near these lows over here, right? This is your potential risk. And this is your, here to here is your reward. So can you see, by being patient, right, it actually gives you a better area to trade from. It actually improves your risk to reward. All right, you can better manage your risk. Instead of chasing the market, I would always suggest to let the market come to you, right? So you can actually place your stop loss at a logical location with a more favorable room for the market to, hit your target. Okay, so this is what I mean by, letting the market come to you, right? I believe you have no issues identifying the trend. What you have an issue with is trading from a favorable location, right? If you always chase the markets, right, it is, in the long run, right, your trading results isn't going to look good, right? Let's say, for example, another one over here I can share with you. Those who traded Brexit event, right, price, say for example, comes all the way to this low over here and you start chasing the markets, all right, so you say this is your entry, then where are you going to put your stop loss, right? You have this huge candle spike lower, you enter at this green line over here. Where is a logical place to put your stop loss? Well, there's no structure to reference to. I think the nearest one that you can is possibly maybe this previous support that could potentially turn into resistance, or some even use this high over here, which is, easily, I think, 1,000 pips or more. So yeah, this is what I mean by, don't chase the market, let it come to an area of value, and from there you can better manage your trade, right? And it's very easy to tell when you're wrong because the moment the structure is broken, the moment support and resistance is broken, you know you're wrong, and there is no reason to stay in this trade any longer, right? Compared to a trader who enters somewhere here, how does he know he's going to be wrong? Because the market can still goes up and comes back down, right? This could be just a retracement, right? And he's not really proven wrong yet until, the market, for example, makes, for example, say a new high and a new low, a higher high or higher low. But in the meantime, right, you can see that, it will really, put him at a very unfavorable position to be in, right? But chasing the market is not a very favorable position to be in because it's very hard to manage your risk from there. Okay, so this is the pound dollar. This is a potential setup I'm looking at, right? This is the area of resistance. And yeah, watch for, price to actually come in towards this area of resistance and, to wait for a trigger. Another thing that you need for is a trigger. So what is a trigger? A trigger can be as simple as, a lower close, right? A reversal candlestick pattern, right? A break of structure. These are all different types of trigger that you can look for, right? So this is an area that you want to pay attention to on the pound dollar. So another market that I'm looking at is the dollar yen, right? So the daily time frame, notice the dollar yen, right? Again, I believe you have no issues looking at this and say that, this is in a trend, right? So one thing I noticed on the dollar yen is that it tends to break out of the 50 period moving average, which is this line over here, the 50 period moving average. It breaks out before it trades lower once again. Then over here, we have another false breakout, then it trades lower, another false breakout, then it trades lower. And right now we have another potential false breakout and there's a possibility of it trading lower once again. So this is a phenomenon that I noticed on the dollar yen, right, the daily time frame. So the thing is that, if for those of you who use trend line, right, you can just connect the trend line from the highs, right? Again, right, this is bouncing off this trend line. So we have quite a few things going for us. We have the trend, the price is at area of value over here, and now the third thing we need is trigger, right? The third thing we need is the entry trigger, because you need to have something, right? The trigger that actually gets you into the trade. So again, like I've said, there are different ways you can go about it. Some traders would just, go short if price were to, trade below this low over here. Some looks for an engulfing pattern. Some look for a pin bar. These are all different forms of trigger, and there is really no right or wrong, right? For me personally, what I like to look for is a break of structure from that's the term I call it, right? So for example, on this 4 hour time frame, right, what I want to see is for price to hit lower, then it trades higher, and then it breaks this low over here, because at this point in time, if it does break this low over here, I have a lower high and a lower low, a break of structure, right? So this is what I'm looking for as my entry trigger for the dollar yen right now, right? So this is the daily time frame, and again, another thing for you to look out for. So this trade and the pound dollar trade is basically trading pullbacks in the market, trading from an area of value. But as a trend trader, as a trend follower, right, you don't necessarily have to trade from an area of value, because you can also trade breakouts, right? And this is another entry approach that you can use, right? Because let's be honest, there's only 2 ways to enter a trade. You're either going to enter a pullback, right? For example, a pullback towards the moving average, a pullback towards the support or resistance, or you can trade the breakout, right? Breakout of the highs, breakouts of the low. Right, so in this example is the chart of sugar. This is the daily time frame, and I'm actually looking to trade this breakout of this high over here. Right, I know a lot of traders are gonna look at this chart and say, "Oh, Rayner, are you sure you want to trade this breakout? The market is so high already, right? Can't go any higher." And that's the thing with with traders trying to predict market tops and bottoms, because more often than not, the market will usually do what you least expect to do. Because let's think about this, right? If you're so confident that this is the market top, why don't you just go short right now and place your stop loss above this high? I mean, if you're so confident that it can't go any higher, then this is the only logical thing to do, right? Go short at this market and maybe get your stop loss above this area of resistance over here. But if you're not willing to do that, then ask yourself why. If you're not willing to short this market, and you're not willing to go long if it does break out, then I think there's something that you really need to ask yourself, why is that so? For me personally, I have a long bias on this sugar, and I'm looking to trade the breakout if price were to break above this high over here. That's my plan, because after all, the trend is still intact. We have higher lows, higher lows, higher lows, higher lows, right? And we have this potential consolidation over here, this range over here. Right? If it does break out, we could see another move higher. So this is what they say, right? Trade what you see, not what you think, right? A lot of times, traders think that, this is too high, it can't go any higher. So, don't think along that lines. Trade what you see. What's the market telling you right now? Is it heading higher? Yes, it is. Is this area of resistance, if price breaks above it, right? Could we have a possibility of price heading higher? Yeah, why not, right? As long as we can contain our risk. That's the most important. I'm not saying for sure that in the moment price breaks out, we are going to get a winning trade, right? A 10-hour, 20-hour trade. No, that's not true, right? Trading is a series of trades, not just one individual trade, right? The outcome of one trade is basically random. But if you take 50 trades, 100 trades, 1,000 trades, right, in the long run, your age will play out, right? And one more thing to add, right? If you think this is high, look at the big picture and see where you are in the grand scheme of things. If you look at the monthly time frame, you notice sugar, we basically had a massive sell-off over the last 6 years, this portion over here. And right now, we're actually at this leg over here. It seems to be like possibly a recovering leg, and even back to retest this highs over here. So if you think this is high, looking at the big picture, is basically, right, recovering from this, massive sell down move over here, right? This is how I choose to look at it. So on a daily time frame, sugar, another potential setup, should price break out of this range over here, right? So you can see, as a trend trader, you can have 2 ways to trade the market. You can trade a pullback, or you can trade the breakout. Okay, so I hope this gives you an insight into what trend following is all about, right? So alright, let me clarify 2 things, right? Trend trader, right? You're a trend trader if you are trading with the trend, right? You are a trend follower, which is a big difference, if you ride the trend, right? You can trade with the trend, but if you exit at predetermined highs or lows, right? If you take your profits, then you're more likely to be a trend trader, right? Trading the swing in the markets. If you're a trend follower, you look to ride the trend, and you don't have a predetermined exit in mind. You just trail your stop loss, right? You can trail, for example, trailing using the 20-period moving average, trailing with using the 50-period moving average, trailing with a structure of the market, higher highs, higher lows. There's really different ways you can go about it, right? So I guess what's important as a trader is to really understand the principles behind it, right? The thought process, right? Don't just focus on entries, right? Entries is just a part of the puzzle, right? The other remaining parts are your risk management, your exits, following your trading plan, your trade management. These are all the little things that tends to get neglected, right? Traders tend to just focus on the entry, right? But I just want you to know that it's just a small part of the equation, okay? So yeah, that's all I have for you in this week's market analysis. It's really good to be back, right? After 2 weeks, right? Because we had the TFMP program that was released a couple of weeks back, plus the special training program that we have for our subscribers, right? So yeah, right, if there's any questions or anything, just feel free to leave it in the comment section below. And if you've enjoyed this video, feel free to hit the subscribe button below as well. With that, I wish you all good luck and good trading. Talk to you soon.